Can you go to the one that was like yesterday?
What was yesterday?
I don't know, where did Dr. Jones
Oh, he was at like some Koch foundation.
go? No.
I don't get invited to those. I'm not like a big one.
He needs to.
You're telling me. I want to go on those nice free trips. Okay, so last time we left off talking about Bitcoin. I don't exactly remember where we were. I think we went through this slide, right? Yeah. Okay. Well, just to briefly summarize for those of you who weren't here, Friedrich Hayek and Ben Klein had an idea for competing fiat privately issued currencies. That could be all these issued at the same exact time, all of them functioning as money in an economy. And we talked about like what the problems are with those. That you can't. It's an issuer's profit motive to hyperinflate the currency to maximize profit. Even doing that in the short run will swamp any gains that they can make in the long run from issuing currency that's used by a lot of people. So that's sort of the problem that they face. And Klein tried to figure it out with brand name capital from competing issuers, but that wasn't enough to overcome the profit that you get from hyperinflation. Because of, how do I want to phrase this? The way that Bitcoin solves this problem and other cryptocurrencies solve this problem is by promising a pre-programmed increase in the money supply. So you know the path that it's going to take, so that way they can't hyperinflate. If they do ever go back on that, people will immediately stop using Bitcoin and switch to a different cryptocurrency, or just go back to the US dollar. So it's not in their profit motive to do that. It prevents the opportunistic issuer from hyperinflating. Just going through, how does Bitcoin differ from earlier currencies? The first currency is precious metals. Obviously, these are valuable. They have uses outside of currency. They were like the last of the commodity monies. Then was privately issued IOUs that were redeemable for these valuable metal coins. So these are some examples of some old ones. These were issued by banks. Originally in Britain, they were issued by mints, the actual people that would mint the gold and silver into coins. And you would exchange those like we exchange dollar bills. And then eventually, if you wanted the actual valuable object it was backed by, you would take it to a bank and get gold from their vaults. Next was the government issued IOUs that were redeemable for the precious metal coins. There's an old silver certificate, US dollar. Or you could go to a Federal Reserve branch or go to the Treasury and get silver for that dollar.
How much are those worth now?
I don't know.
Okay.
I'm actually kind of curious about that.
I don't know, there's one in the house. Mom's house.
My grandparents had like some old money laying around. I wonder what. I really hope they didn't put it in the bank. And next came the government fiat currency. This is money not backed by anything. Federal government issues money with, says $20 on it, and it's worth $20 worth of goods. But unlike the previous money, there's nothing behind it. There's nothing backing it up. But it's legal tender, so you have to pay the government taxes in it. And obviously they're going to be paying their contractors, paying their employees in that money. So it's still widely used in the economy. Plus, as I said before, it doesn't benefit anyone to refuse to accept it and to go back to like some other commodity. Also, like in the case of the Somali shilling, inertia can be enough that people used to accept it. They're not going to switch to a different one because, again, they don't find any value in it. It doesn't make them better off to not accept it. Then it just shows the difference, what the notes used to say when it was backed by something and when it wasn't, now that it isn't backed by anything. So now, cryptocurrencies, and I'll use Bitcoin and cryptocurrencies interchangeably because Bitcoin is a brand name that everyone knows. These are private currencies, so they're issued not by governments, but by private individuals and groups, and they are fiat currencies, so they're backed by nothing. You can't exchange your Bitcoin for anything of value. It doesn't represent some basket of goods. It's entirely digital, so there's no actual physical Bitcoins. They used to like print out like certificates that you could like hang on your wall, just to like show your friends that you have Bitcoin. But they don't circulate as currency at all. It's just like a certificate for like a collector's item, basically. And like I mentioned before, it's verified by what's called cryptography. So on the blockchain, a majority, so like 50% plus one of the Bitcoin miners have to validate a transaction to make sure it went through to basically keep track of everything on the ledger. And you think of the blockchain as a ledger. There's like a giant accounting spreadsheet of who has what coin and when. So unlike a banknote, a Bitcoin is not a debt contract or a liability. There's nothing backing it up. There's no, like the bank is liable for the money that you have in your account. There's no one that's liable for the Bitcoin that you have. And it's issued by a business enterprise. So again, it's like the older currency, the old privately issued currencies that were backed by gold. It's an IOU nothing, so it's like fiat currency. Again, nothing backing up. And it's easily transferable from one person to another. It used to take about 10 minutes on the blockchain. That's why Bitcoin split. One of them wanted to do a faster verification process. So I don't know which one off the top of my head went with the faster verification. But there's no trusted central party, so you're not dealing with like the government issuing currency like we do for the U.S. dollar. It's entirely decentralized, and Bitcoin is not yet widely accepted in payment. So it's not really doesn't function as a currency because you can't go buy and sell things in Bitcoin. That was okay. So Bitcoin was launched in 2009 as a hobby project by Satoshi Nakamoto, that's like a pseudonym for whoever came up with it. He hasn't released his name yet, so no one knows who it is. But people, try to figure it out because it's a fun game. It's supported by a community of computer enthusiasts, anti-government people that don't trust fiat currency. It started out as like more or less of a political statement and a thing to do for fun, rather than actually trying to create a new currency. That'd be widely accepted and everything. That would overtake the dollar. It's more of like a pipe dream and thing for fun. But since it became more widely used and more people began to hold it, it's surrounded by for-profit exchanges. So you can go to like Coinbase, which is where I keep my very small holding of Bitcoin. Bitstamp. There's a few other ones, and they're super hardcore encrypted wallets that prevent anyone from hacking in. There's different payment processors that I can go through to handle the actual payment process. So there's a lot of infrastructure that's grown up around Bitcoin for it to be used. There's several people that they think is Satoshi Nakamoto based on who was involved in Bitcoin early and who was writing about it first, and who was involved in cryptocurrencies before that. This slide's borrowed from Larry White. He said leading candidate was Nick Szabo, because Nick cited him in a paper he wrote like a year before that about how money supply, how it's involved in cryptocurrencies. So he's rooting for that guy so he could get cited by Satoshi. A lot of people don't take it seriously because it's known for outlandish personalities and computer nerds. There's tons of memes about it, and it's, I don't know, you go in the dark corners of like Reddit or 4chan and people are like talking, joking about it. John McAfee, who's almost like a spokesman, is insane if you follow him on Twitter. So a lot of people, especially when Bitcoin was blowing up, it was about 2 years ago now, the price increased, above like $17,000 for one Bitcoin from like $2,000 for Bitcoin that summer. A lot of people, when it first began being discussed like on the news, they'd say, oh, like, what is this stuff? This is weird. Weird people like it. Doesn't really help the adoption, especially among older people, less technology savvy people. So Bitcoin is irredeemable, and the question is, what kind of gives it its value? Where does, I don't know, how could this even be valued by people? How can it be accepted if there's nothing to it? This is an example of an old Andy Warhol print when he did like the Campbell soup thing. A lot of old prints or collectible like memorabilia have, oops, it doesn't, I guess I didn't save that. Okay, but you can't really see it. But in the bottom corner here, you got his name there. Over here it says, I don't know, like 50 out of 300. Because they limit the supply and there's a set number of them, it then gives it the value. So like my friend has, I don't know, a collection of Garbage Pail Kid like cards. There's only a limited amount of those, which is kind of what gives it, which is why it's more valuable. And you guys watch It's Always Sunny? Okay, not a lot of nods. That was a reference from It's Always Sunny. Charlie had these cards for Garbage Pail Kids. It was like some weird show from like the 80s.
Oh, I remember that. The main traits on the frame.
Yeah, to get Dennis Kennedy to drop out of the election.
The comptroller elections.
Yeah. Okay. But yeah, because of the limited number, people then seek it and go after it because of its rareness. So now there's, like I mentioned, a lot of personality and memes about Bitcoin. One of the reasons why it's not taken very seriously. John McAfee has promised to eat his dick on national television if it doesn't reach 500,000 by the end of 2020. And he keeps claiming, he keeps tweeting out saying, I'm going to do it if it doesn't get there. But he believes so much that it's going to get there that he doesn't care. If you look in the bottom right-hand corner, someone held up a Buy Bitcoin sign at a Capitol Hill event.
I think we need to see the video.
Here's a GIF right here.
Yeah.
You'll notice right behind, that was me that ducks out of the way there. So when I was at the Cato Institute, I was I was working in the Center for the Study, no, what do we call it? The Center for Monetary and Financial Alternatives.
He looks at you. Did you know what's going on?
Yeah, so him and I both interned at the Cato Institute at the time, and we were both doing monetary policy stuff. He's like a used car salesman for Bitcoin. He tried to convince everyone to buy it. I had to watch this hearing and take notes on it. This is Humphrey Hawkins, where the Fed chair testifies before Congress every 6 months to tell them the state of the economy. I told my boss, I'm like, hey, it's right down the street. Instead of watching it, can I just go? That'll be a lot more interesting. And they're like, oh yeah, go ahead. So Christian and I go. I can use his name because he's been doxxed now. Two of us go down there. We get there super early, 4 hours before it starts, so that I can get to see right behind yelling and be on national TV. It's text my mom, hey mom, I'm gonna be on TV, tell people, look for it. So she looks for it, and I'm right there, and she's like, oh, this is so cool, and then ignores it and goes back to work. And then we're sitting there, and Christian doesn't realize this is on national television, so he's trying to talk to me, and I'm like, dude, we're on camera right now, we can't talk. But he was he drew out Buy Bitcoin. He did 3 different designs until he got the one he wanted. And then you can see him there. He nudges me. And I'm like, what are you doing? And then he picks up and holds it up like this, and I just go, oh fuck. You can see that.
They cut it so quick.
Oh yeah, they cut away immediately. If you go to watch this on the hearing on the, I guess it's C-SPAN. I guess that puts it out. They do a different angle the entire time, so you can't see us.
Really? That's hilarious. Did they say anything to you, or they just?
Yeah, so the Republicans had the House then, so Jeb Hensarling was the chair. One of his staffers came up to us and told us not to do anything again. And she was talking to me, and I'm looking straight at it. Everyone thought it was me at first. And then Christian's answering her. And like she leaves, and then she comes back like a half hour, 45 minutes later, and says, "Yeah, this is blowing up on the internet. You guys got to go."
Really?
Yeah, so kicked out on national TV.
That other dude right there,
Yeah.
in the other frame in the background, I worked with him over at the sign.
Dang.
That guy.
Right there on the left.
Yeah.
Nice.
It's Snapchat. It was like you missed my econ class.
Shit, no, I don't remember the story. Where am I going from there? Oh yeah, so everyone thought it was me. So like CNBC crops it. When they crop the picture, they cut Christian out of it, so it was the sign in front of my face. So everyone thinks it's me. It's like one of my mom's coworkers goes, "Hey, do you see those guys that like held that thing at Capitol Hill today?" She's like, "Wait, Connor was at Capitol Hill today."
Oh.
Let me see that picture. And like he shows it to her. She's like, "What the hell? It's Connor." But after he got kicked out, Christian posted a picture like on Reddit of like him and like his Bitcoin wallet, because like I don't know, all the Bitcoin nerds were talking about it. They're like, "Oh, we should like pitch in and give this kid some beer money." By the end of the day, he ended up making $10,000 worth of money from Bitcoin donations. He ended up at about 25 by the end of the week when they stopped rolling in. But it was only worth like 2,000 for Bitcoin at that point. By the end of the year, it got up to like 17, 18, 19K for Bitcoin. So if he'd have sold then, he would have made a lot of money. And of course, Reddit went crazy. I got roasted on Reddit. That was always good. One dude said I look like Billy Bob Thornton, and I'm still upset about it.
If they watched it, they could tell I wasn't you.
Yeah, initially it was just a screenshot that was out there. That was John McAfee's pinned tweet for a couple weeks, so I felt really cool about that, making it on Twitter. But obviously, once it happened, like people kept like tagging me in tweets, like, "Oh my god, my friend's famous," and I'm just like, I just shut down my Twitter for because I didn't want like people to find me, because they immediately like reached out to Christian and like tried to get him for like interviews and stuff. He ended up having to leave Cato because of the whole situation.
Really?
Well, because all the people donated him money, they said either get rid of all the money and keep your job or leave. And he's just an intern, so he was gonna be done in a month anyway. That was my
What's he
brush.
doing now?
What?
What's he doing now?
Last I talked to him, he was working for like a cryptocurrency hedge fund out in California. This is like he like eats, sleeps, and breathes this stuff. One more time. Oh wait, there's the one thug like video. Shit. Oh yeah, and because he did that, and he didn't know this, but he did it while she was being questioned on the Fed being audited. These people thought we were two Fed employees that were warning people the US dollar is about to crash.
Oh.
Yeah, so I was part of a conspiracy theory, which I'm kind of proud of. It also shows you how much BS goes into those conspiracy theories.
Yeah.
It was just Christian wanting attention. He didn't know that people actually watch it because he had to watch a bunch of flood insurance hearings because that was really big that summer. He thought like no one watched it, and he was going to watch on C-SPAN later and like screenshot it and make it as like his Facebook profile picture, and then people be like, "Oh, it's kind of cool that you did that." Instead of like everyone involved in finance in the world watching that, and a ton of economists. Still mad about about getting roasted. What about Thornton, really?
Pulled up side by side.
Okay, so this is a timeline of like the early history of Bitcoin. there were a few other cryptocurrencies in existence before Bitcoin came out. There's a video of Milton Friedman talking in like the late 70s or early 80s about how possibly we could use the internet for creating a currency and for transactions. But it was purely like a Peter Thiel kind of, hey, like what if? He didn't do any like practical work for it. The first like good example is David Chaum's project DigiCash. It solved the problem of double spending. That's what it sought to do, where people could like spend the currency once, like I send it to you to buy something, and then before the transaction goes through or whatever, spending it again. So I don't know. It basically like counterfeiting a physical dollar, like you're spending it twice, using it twice, you're increasing the money supply. He was the first to work out a way to prevent that. The early projects couldn't do that. Then Hashcash had what they call the proof of work device, which is similar to the Bitcoin mining process and to the blockchain, establishing more efficiently who has ownership of each Bitcoin, or of each, I guess, Hashcash coin. And then early 2008, there were 3 similar cryptocurrency proposals. Szabo was the one who did BitGold, so that was like kind of backed by gold. And then in late 2008, Satoshi posts the Bitcoin white paper. 2009 was early 2009 was the Genesis block, or the first Bitcoins that were issued. Obviously, the first ones can't be mined because they can't validate. There's no transactions to validate, so they had to put a certain amount of Bitcoins out there into circulation. It only went to a few people, and it was very small. This is just a group, I guess, to a group of like computer enthusiasts who like hacking and coding and all that sort of stuff. First ones to get Bitcoins, and then from there they began validating transactions. I guess that didn't occur until May, when they used 10,000 Bitcoins to buy 2 pizzas. First ever transaction, and the first time they could actually really value Bitcoin. By March 2011, 1 Bitcoin equaled $1. So you see there was a sharp increase from 2010, when it took 10,000 to buy 2 pizzas, like $20. Here's the price as of this morning. I checked it out. It's a little over 10K. Let's see. This is Bitcoin not from the beginning, but from like the early days. I'm pretty sure this spike here was when it passed gold at $800. That was a similar run up to like the most recent price spike. It started running up towards gold, and people wanted to get involved because they thought, oh, this could be a better hedge against inflation than gold is, because it's more highly valued. Then after that, same thing we saw before, the price decreased again. There was a bit of a crash. People forgot about Bitcoin for a while, and it stayed. You can see the value doesn't change very much from 2014 to 2016, and that's when you start to see the increase there. It was really cool when I was taking monetary theory and we were talking about Bitcoin. It was that like November, December when the price was spiking. So everyone was talking about it. It was in the news, and then we were talking about what it actually was.
Was there a specific reason why it blew up, or was it just out of nowhere?
I'm not really sure what caused it. Part of it was just more public recognition, that more and more people were hearing about Bitcoin. If you weren't involved in, alternatives to fiat currency, especially up until like 2016, 2017, you really didn't know about it. I can't think of like one specific instance that like put it in people's like consciousness, so they knew about it. But then once it started increasing, like 4,000, 5,000, 6,000, more and more people are hearing about it, and more people putting money into it. And right about the price peak was when the Chicago Mercantile Exchange, not when they announced, when they put into place the futures contracts on Bitcoin. So you can now short it or do the other like financial instruments on it. Before that, you could only buy Bitcoin. Like you could basically only place a bet that it was going to go up. If you thought it was going to decrease, you couldn't short it or anything. All you could do is sit on the sidelines and watch. At that point, you could short Bitcoin. You could say, oh, this is overvalued. And that's immediately what happened and part of the cause of the crash right afterwards. I think the announcement for the Chicago Mercantile Exchange, obviously it takes time to like set up these futures contracts and everything. I don't know at what point in the increase it was. It was somewhere along the way. It wasn't like the spark back in like, what would have been like 2017. But that definitely helped it. That sort of recognition and that sort of acceptance helped more people invest in it.
Do you think the video
It moved the market that day. It went from like 2,000 to like 2,400. I wish I could take more credit for that. Fortunately, I was just the guy trying to get out of the way. What's next? Okay, so notice when we talk about Bitcoin, or especially when I talk about Bitcoin, I talk about investing in Bitcoin. That's still the way that most people look at it. They don't see it as a currency to be used. They see it as a currency to invest in because it may increase in value later. Which, just that sort of attitude towards Bitcoin shows that it's still not ready to be accepted as a currency in like regular payments. It's not going to be commonly accepted medium of exchange if people are just buying it and hoarding it. It's, in this regard, it's similar to like a digital gold. It's just being held as a hedge against inflation. And it's also being held as an investment vehicle because people think it's going to increase in value. Because there's a limited supply of Bitcoins, the more and more people that want to use Bitcoin as either to hold it or to actually use it as payment, the greater value it's going to have. Which is why using it as an investment vehicle does kind of make sense if you think it's going to be adopted and used eventually. I don't know, to buy it now when it's worth little instead of later on when it's worth a lot more. There's a lot of critiques against Bitcoin. This one is from an economist at the Federal Reserve Bank of Chicago. It says that Bitcoin has a status of quasi-monopoly in the realm of digital currencies by virtue of its first mover advantage. This isn't exactly true. Bitcoin does have a large market share in the cryptocurrency market, but doesn't have a monopoly. Entry is open. There's low cost to get involved. Bitcoin can't restrict its quantity because it's pre-programmed. So they can't act like a monopolist. In our studies of a monopolist market, monopolists restrict the supply so they can get a higher price per good. So they're able to maximize profits. Bitcoin isn't able to act like a monopolist. They're not able to restrict the output below what would be, the societal optimum. Also, like we say, entry is open. It has similar characteristics to monopolistic competition. You could argue that it's perfect competition or monopolistic competition based on how well you think these cryptocurrencies can actually differentiate themselves. Like I mentioned, there's like Litecoin, who they have much faster validation times. There's like Greencoin that takes a lot less energy to validate them. If you think these are, Ethereum has the superior blockchain, which is why that's like the value that it adds. If you think these are substantial differences, you can argue it's a monopolistic competition market. If not, then it's a perfectly competitive market, and then you don't have to worry about the first mover advantage that Bitcoin has. They were first, they got a large market share because they were first, but if Ethereum has a better blockchain, and that's not enough of a differentiation, they should be able to overtake Bitcoin pretty easily. He does make an ironic statement about currency being controlled by a very small amount of people with any accountability, arbitration, or recourse. How it's hard to imagine that when that's basically the US dollar at this point. And here's a professor from UC Berkeley that unless Bitcoin can differentiate itself from what's called altcoins or alternative coins, the later competitors' cryptocurrency market. The supply of Bitcoin-like things is infinite because the cost of production is infinitesimal. It's literally, you sit down, you write the code, and then you can create your new cryptocurrency. So Bitcoin's like fiat money, and unlike the older century, the Yap stone money, that was like private stone money used on an island. Its cost of production is zero. So, but in reality, Bitcoin is differentiated from the alternative coins, just like the US dollar is differentiated from the Zimbabwe dollar. I use Zimbabwe dollar as an example because they were experiencing hyperinflation at the time. The hyperinflation of the Zimbabwe dollar doesn't erode the value of the US dollar. It doesn't change our value at all, even though they're hyperinflating. Similarly, the existence of a different cryptocurrency or like a growth in their money supply doesn't erode the value of Bitcoin because you can't pay the alternative coin instead of as a Bitcoin. They're two separate things, so you don't have to. The money supply of one doesn't affect the money supply of the other. And Bitcoin's cost of production isn't necessarily zero. Because the money supply is on a pre-programmed path, it would be extremely costly for them to increase the money supply above that path. Because at that point, no one's going to use Bitcoins. If you break the promises once, people are going to assume that they can do it again at any time. And that completely destroys the one benefit that Bitcoin has, the solution it has to the privately issued fiat currency problem. And now comparing this to Hayek and Klein's model of the competing privately issued fiat currencies, there's no potentially opportunistic issuer. There's no one person in charge of Bitcoin. The system is decentralized among all the different Bitcoin owners. So I guess even me with my like $45 worth of Bitcoin, I'm technically involved in the decentralization of this. And I bought it for two reasons. One, to make the Bitcoin sign guy's story better. Same reason I bought the t-shirt that someone made of it. The other reason is I bought it as like a scratch-off lottery ticket, just in case. Well, right now Venezuela is really high inflation. So say they hyperinflate. If instead of switching to the US dollar, like most Central and South American countries do, if they switch to Bitcoin and start using that in transactions, the value of that increases substantially. The odds aren't super high, but I figured if you're willing to buy a lottery ticket or go to a casino, why not try that too? New coins are generated at a pre-programmed rate. So unlike Hayek and Klein's model where they can increase the money supply at any time by any amount based on what they think is the best for their profit, in this case, it's controlled and it's guaranteed over time. So yeah, by the end of 2016, they were at about 16 million units. That's increased since then. I don't know what the exact number is, but it'll max out at 21 million units. At that point, the money supply is going to stay stable. Yeah, so the pre-programmed rate of increase, like I said, the solution to Hayek's problem. However, that causes the value of it against the US dollar to fluctuate substantially. And in some days you could see wild swings in prices based on if people want, if the demand to hold Bitcoins increases or decreases. So if people want to hold more Bitcoin, the value is going to go up. They want to hold fewer Bitcoins, the value is going to go down. So it makes it very difficult to price things in terms of Bitcoin, especially because everything else in the economy is listed in US dollars. You have to basically constantly have the price adjusting to the new money demand. So, I mean, that's why most people don't accept Bitcoin for things, because even if you accept Bitcoin and pay for like selling the good, to buy from your suppliers or to pay your employees, you're still gonna have to pay them in US dollars. And that can swing wildly. I mean, like I said, throughout the day, not even like week to week, but like throughout the day. And because of the fluctuation, people are very, very slow to adopt it. So even though this is a potential alternative currency, it's still really far away from actually being accepted and being used. And it's hard to imagine a way to solve the fluctuation problem and still keep the pre-programmed money supply. And this is a problem when we read Money Free and Unfree later on in the semester. We'll talk about the US money supply and the banking system in like the late 1800s, and they suffered from the same sort of problem, was that the money supply was fixed in the short run. So when there would be a run on banks and people want to withdraw money out of their bank accounts or turn in their banknotes for gold, there would not be enough money in the bank to go around. And that caused serious problems in the economy. And that's the reason why they created the Federal Reserve. In the legislation, the purpose is to establish an elastic currency, which means that it can adjust to supply and demand. If someone can figure out a way to somehow keep the money supply limited to prevent hyperinflation, but at the same time make it elastic, and I have no idea how you would do that, then you can see the cryptocurrency actually function effectively. I don't know if I want to ask, is Bitcoin's value a bubble? Because the price is a lot lower than it was a couple years ago. But there's no other use for it other than as a medium of exchange. You can't redeem it into anything else of value. So think of, have you guys heard of the tulip mania?
In the Netherlands?
Yes, in like the 1600s. That was the first instance of a speculative bubble. The value of tulips increased substantially over a couple-year period. People were like spending thousands of, I don't know what their currency was.
I don't know. The fluels.
Yeah, but thousands of fluels on Bitcoin or not Bitcoin, on tulip bulbs to plan for the next year. I don't know how the value increased so substantially like that, but eventually the price crashed. I think it was caused by like a blight or something that killed a bunch of the tulip bulbs, and their economy really suffered. There's some really cool and interesting like things written about that. I hate when I go off on these tangents. I don't remember what I was talking about.
It's okay.
There's a question of whether Bitcoin is a counterexample to Mises' regression theorem. Basically, the regression theorem is the idea that the value of the money the day before is necessary to ground the purchasing power expectations. People aren't going to want to hold something as a medium of exchange if its value fluctuates substantially from day to day. If it's not anchored to the value the day before, people are going to be less likely to use it because it's more difficult to try to figure out what its value is. Imagine if you went to Smith Myers and today something that was $1 is $2, then tomorrow it's 50 cents, the next day it's $1.25. The way moving that frequently will make currency that much more difficult to use. People aren't going to be willing to hold it. There's an idea that the ideology behind it was initially what grounded the purchasing power of Bitcoin, that it was mostly anti-government people that didn't believe in trust, didn't like fiat currencies, so they created their own. And that's what helped get them off the ground. Because there's a question for economists: how did Bitcoin actually achieve a positive exchange value? How, in the beginning, how was it worth something when it really shouldn't be? And the best we have right now is the ideology behind it got the initial people into it, and then from there the value slowly grew over time. Yeah. So do you guys have any questions about cryptocurrencies, about, I don't know, how they work, or is there anything else you need me to explain?
The mining thing. So to get people to mine, they give you like a small amount of Bitcoin for every transaction mined, right?
Yeah, it used to be a huge amount of Bitcoin, but now
So what happens whenever the supply of Bitcoin is low?
I don't know how they're going to convince people to keep mining. I don't know how they figured that out. I'm curious about
It's
that
down
too.
to 12.5 Bitcoins per block, and they make 1,800 new Bitcoin per day.
as of 15 seconds.
You just look that up.
It's like the coding. You know anything about the coding?
I do not know the coding behind it. If you're interested, they have like their white paper, and so you could read about how it functions, everything about like the process of Bitcoin, and then the code is open source, so you can go on and pull it up and look at it. That's just not something I haven't done because I'm not a great computer coder.
You know anyone that mines?
Yeah, one of my buddies that graduated from here, he mines Bitcoin. He started back in like 2014, I think. And probably before that. We talked about an undergrad, and I never did anything with it.
Do you think when everything's mined, GPU prices will finally go down and be affordable now?
I don't know, that's a good question.
Because they've been ruined.
All right, if there's nothing else, we'll end class there.